Thanks for joining us today for Jennifer Schaus and Associates in our Webinar Wednesday program. We are coming to you live from Washington, D.C. Our webinars are every Wednesday and are provided complimentary. They're recorded and can be downloaded from our website and YouTube channel, which now holds over 400 of our government contracting webinars. In the interest of time, we do not take questions, so if you have questions for our speaker, we will have his information on the last slide of the presentation today. A special thanks to our educational sponsor, the National Veteran Small Business Coalition, for making these webinars possible. The NVSBC is the largest nonprofit trade association for veterans. Please visit their website for more information. Okay, and now a little bit about us. We work with U.S. federal government contractors, including product, service, and software firms. Our services range from market analysis reports to contract vehicles and compliance, and more information is on our website. We also have opportunities for your organization to advertise in our newsletter. We now reach over 21,300 subscribers, and this includes both contractors and government. And you can contact us for pricing information with the email shown on your screen. As noted, we now have over 400 webinars in our archives. As we continue to educate federal contractors, I would like to bring your attention to the webinar schedule for 2021. The full schedule and speakers are all confirmed. First up is a monthly series called the GovCon Live Q&A Cafe. This is a live webinar series held each month, and these will take place on the second Friday of each month in 2021 at 12 p.m. Eastern. We have assembled a group of 4 panelists who are subject matter experts on a specific federal contracting topic. The panelists will make a short presentation about the topics listed here on your screen and then take your live questions about that topic. So, for example, January will kick off with our panelists covering CMMC on Friday, January 8th. Our panelists include attorneys, consultants, and other industry professionals, and you can sign up on our website under the Q&A Cafe tab. Sponsorships are available, and you can email hello@jenniferschaus.com for a media kit with pricing details. Okay, and in our second webinar series in 2021, we will be covering each part of the DFARS, or Defense Federal Acquisition Regulations. Similar to our current FAR series, this will be a weekly series dedicated to defense contracting, its rules, and specific regulations. This series is complimentary as well and will be held on Wednesdays at 12 p.m. Eastern. We will run through the parts sequentially, which means that we'll start the year with DFARS Part 201 and finish with Part 252 at the end of the year. You can sign up on our website under the DFAR tab, and again, sponsorships are available, and you can email hello@jenniferschaus.com for a media kit with pricing details. Okay, and now to introduce our speaker, Brad Jorgensen. Welcome, Brad. We are glad to have you here with us today, and I'll now turn the floor over to you.
All right, appreciate it. Thanks, Hunter. My name is Brad Jorgensen. I'm a partner at DLA Piper, government contract shop. I was in DC 2006 to 2008 working for the Department of Justice and handling government contracting matters. And then I went to private practice in 2008, and I've been with the firm ever since, relocating from Washington, D.C. to Austin in 2018. And a large proportion of my workload focuses on the government contractor mergers and acquisition setting. Maybe as much as 70–75% of my workload is in this space. So it's something that's near and dear to my heart. And today is going to be kind of a survey course, crash course, if you will, on identifying certain of the key compliance and risks associated with the acquisition of a government contractor. And I think, as we all know, government work can be highly rewarding. There's a lot of it. The government typically pays on time. They oftentimes pay at a premium. Those are all the positives. I guess the downside, if you will, is that it's a highly regulated environment. So, Hunter, if you wouldn't mind just passing it along to the next slide, that'd be great. It's a highly regulated environment. So the government obviously is spending taxpayer funds, and it advances socioeconomic goals, policies, procedures through the expenditure of those funds. And for that reason, oftentimes attached to Your performance obligation will be something entirely unrelated to the performance of the work at hand. Verifying employees, not texting while driving, utilization of small business concerns, things of that nature. And so hurdling those regulatory requirements is obviously part and parcel to doing government work, and sort of goes with sort of the standard practice in that regard. And so it makes sense that if there is a purchase, an acquisition of a government contractor somewhere in the buy-sell chain, we need to identify those unique compliance obligations, one, and two, assess in some meaningful manner whether or not that target company, that target government contractor is in compliance, or at least material compliance with those obligations. And so the way we do that is we do diligence on the front end. So this would be buyer side diligence performed in advance of closing. And the way I like to think of it is, you wouldn't go out and you wouldn't buy a vehicle, an automobile, sight unseen. First you would kick the tires. You would maybe go out on a test drive. You would ask for and review the maintenance history. You might ask if there's been any accidents or wrecks. You might get online and review, online reviews of that particular vehicle, maybe review the performance specifications. That's all sort of the diligence that you might perform before you lay out, $10 or $20 or $30,000 on an automobile, a significant expense. And the failure to do that diligence in that context, you may not be on the hook for some liability. If you didn't do the diligence and you drove down the road and all of a sudden that vehicle, veers off and hurts somebody or damages some property, that's going to be on you as the new buyer. And so you can sort of mitigate some of those risks by doing pre-closing diligence, and it's the same in the government contract or M&A context. And so what we're going to do here is we're going to sort of highlight certain of those potentially difficult issues that arise in the diligence process. So Hunter, if we could advance the slide, that'd be great. And so I think as we're all familiar, doing government work requires compliance with sort of a web of statutory, regulatory, and other contractual obligations. And these are unique to government contracting. It's something over and above what you would expect to see in sort of a purely commercial contractual arrangement. As I'm sure all of you have, I have at my fingertips a hard copy of the Federal Acquisition Regulation and the DFARS also. I flipped through it in advance of this presentation. It looks like the latest version on my desk has 2,313 pages in the FAR. The DFARS is growing increasingly, it seems like, year over year. We're now up to 1,704 pages in the DFARS, and as you're probably aware, it's like size 8 font on newspaper type paper. So there's a whole lot to comply with, and that's to say nothing of the other agency FAR supplements that might be applicable, like, a host of executive orders or other sort of implementing guidance. And so if you layer all of those different statutes, implementing regulations, executive orders, guidance on top of each other, I think it's fair to say that, doing government work creates unique risks and obligations. And the failure to satisfy those unique risks or obligations could give rise to fairly significant and unique liability. I think a lot of this liability, or sort of the unique risks, come from the fact that your counterparty in this context, in the government contracting context, the counterparty is the same entity that has investigation, nearly unlimited audit powers. It's the same entity that enforces, that basically drafts the rules and then enforces their compliance. It's the same entity that prosecutes noncompliance and has the power to do all of that. So unlike a situation where one private citizen or one, commercial entity contracts with another commercial entity, there may be certain damages, at hand for noncompliance or a default situation. But here, those same sort of default or non-compliance situations, the risk is magnified given sort of who you're doing business with, who is the counterparty here, and that it's the federal government. And so to meaningfully assess these unique risks, the buyer should request and expect to receive detailed information in advance of closing that addresses the seller's government work. And the way we kind of get at this in the government contractor mergers and acquisitions context is typically the buyer would float across the bow to the seller a list of diligence questions and document requests. And, having done this for a while now, those lists come in all different shapes and sizes. And, the risks or the list will typically assess those high-level risks. And then given the responses from the seller to those questions, there could be obviously supplemental requests, supplemental document requests, diligence questions. It's also fair game, I think, if you're the buyer to request to interview contract managers and administrators that are situated with the selling entity. And then given, again, sort of the responses that you receive if you're buyer's counsel or working on behalf of the buyer, I think that those responses could spin off into other supplemental requests and demands. And so it's totally sort of expected if the seller does government work and you're looking to, sell all or a portion of your business, including maybe the assets that are required to perform your government work, you should reasonably expect from the buyer requests in this regard. And at the end of the day, the sort of focus of these requests or the goal on the part of the buyer is to understand more about the seller's government work, the risks that are involved in connection with that work, and whether or not the seller is in compliance with those risks. And so the buyer does this diligence. There's a back and forth. There's an exchange of information. Documents are shared, responses are provided, things are learned about sort of the seller's government contracting activity. And then ultimately, the merger acquisition is consummated via some sort of a purchase agreement, a merger agreement, a purchase agreement, an asset purchase agreement, an equity purchase agreement, whatever it is. And that purchase agreement, like any other contract, is going to have terms and conditions. And certain of the terms and conditions in this context take the form of representations and warranties. And so these are representations and warranties made by the seller with regard to specific topics. And to the extent the seller does government work, some of those topics reasonably will address government contract issues and compliance concerns. And so if the buyer is ultra cautious or the seller wants to sort of sweeten the pie and facilitate getting to the finish line, oftentimes the parties will jointly purchase, or the buyer will purchase, or in some cases even the seller will purchase insurance that will protect the buyer against breaches in the seller's representations and warranties. And for AIG and other insurers, I do a lot of the underwriting diligence. And so in that form, what I do is I review the diligence reports that the buyer and the buyer's counsel has performed to assess these government contract issues. And I help the insurer make the decision as to whether or not adequate diligence has been done to sort of root out the key issues such that the insurer is not serving as sort of a proxy for adequate diligence. An insurance policy is available, but to the extent no diligence or inadequate diligence has been performed on the part of the buyer, the insurer will exclude from coverage breach of government contracts, representations, and warranties. So, although an insurance policy may provide adequate or extra protection or coverage to the buyer in the event that something goes sideways or something wasn't discovered and then surfaces at some point post-closing, it should not be viewed as sort of a substitution for diligence in the first instance. All right, Hunter, let's move to the next slide. All right, so let's focus down on certain of these risks and hidden liabilities. I think a lot of them stem from the enforcement tools that the government has to address noncompliance. And one of those key tools is going to be the Civil and the Criminal False Claims Act. If you've had sort of any exposure to government contracting, that's kind of the big stick that the government carries. And it's the real risk that a government contractor takes on when they decide to do government work. And those risks could arise in the form of, an invoice that, requesting payment from the government that's not accurate. It could be in the form of certifications submitted with a contractor's proposal that get rolled into the contract that were inaccurate. And so non-compliance, under the Civil False Claims Act could result in treble damages. And there are situations that I'm aware of. It's a pretty bad or scary line of cases in the small business context, for example, where if a contractor puts in a certification that they're eligible to perform work that's been set aside for a small business, there's a bad line of cases out there where if that certification is false or erroneous, even if it's not sort of an intentional falsity, but just sort of a reckless falsity, if the certification for small business status or eligibility is inaccurate, Again, there's a bad line of cases out there where the government would be entitled to treble damages, and in some jurisdictions, that could be 3 times the total value of the contract. So if the portfolio of the target company includes, for example, a host of contracts that were awarded contingent on small business status, if our buy-side diligence doesn't include sort of a meaningful assessment of the accuracy of those certifications, it's very possible that the buyer could purchase that portfolio of government contracts through this M&A transaction, and to the extent the seller, inaccurately certified itself as a small business concern in order to obtain that work, all of a sudden at treble damages, the total liability could potentially exceed the total value of your M&A transaction. You could be potentially buying more liabilities and detriment than actual benefit, perceived or otherwise. So if you sort of scroll through the list, you can see that criminal civil penalties are at the top of the list. Other risks or potential hidden liabilities center around the long-term revenue and valuation projections. And that's just a challenging sort of issue all around with government contracting. Given kind of the year-to-year nature of government funding and appropriations, most government contracts don't extend past 5 years. And even those 5-year contracts typically would include only, a guaranteed 1-year base plus 4 one-year options or some combination of option periods that could be exercised at the government's discretion. It's pretty rare to see a potential lifespan of a government contract exceeding past the 5-year figure. And so given kind of the nature of, government discretion to elect to, exercise an option period and sort of the funding nature, it's difficult in some cases to sort of tag the long-term value or revenue stream associated with this government work. And then sort of embedded on top of that would be the fact that the government retains the right to terminate these contracts for its convenience, which is a unique right to government contracting. It applies regardless of whether it's expressly written into the 4 corners of the document. Even if the topic, termination for convenience, isn't addressed within the 4 corners of the document, the contract, it will still apply by operation of law, meaning that the government will always have that ability to terminate for its convenience, which is truly for its convenience. There need be no sort of failure or non-compliance on the part of the contractor to sort of trigger that right. And so there's certain at-risk elements to government contracting as far as the longevity and the revenue accounting aspect of it. And we also know that the government retains very broad and sometimes deep-cutting audit rights that could allow it to ultimately go in and retroactively change the pricing, the benefit of the bargain that was struck between the government and the contractor. There's also, unlike in the sort of purely commercial contracting context, a government contractor has the affirmative obligation to sort of ring its own bell and to disclose issues of noncompliance to the counterparty, the government. And so these risks are sort of unique with regard to government contracting, and they all sort of are embedded within this idea that also is unique to government contracting, that responsibility of the government contractor is to be assessed with regard to each award that the government makes. And so elements of responsibility would include whether the contractor has a satisfactory record of integrity and business ethics, and the necessary accounting and operational controls. And so, sure, there are kind of dollars and cents, nuts and bolts liabilities that clearly we want to avoid. But looking forward, if the contractor doesn't have sort of a clean bill of health, in this industry, government contracting, your reputation as assessed through this lens of responsibility on a kind of a contract-by-contract basis is paramount. And so if you're purchasing a government contractor that has maybe a tainted reputation, it could certainly affect the long-term value of that entity that you're purchasing, its long-term or future revenue streams. And frankly, to the extent that target entity is rolled into the purchaser, that sort of reputational taint could extend into the purchaser, even if the purchaser otherwise had a sort of a stellar or a clean reputation or no questions about its present responsibility. So to sort of assess this and to hopefully mitigate these issues, diligence, pre-closing diligence is the word for today, and really should be the focus of any of these M&A transactions where a government contractor is embedded somewhere within the buy-sell chain. And so Hunter, let's move on to the next slide. And so I mentioned kind of at cursory level, these M&A transactions are consummated through a purchase agreement of some sort, and that purchase agreement will include these special representations and warranties. And those representations and warranties will address some of these unique issues that we've talked about already today. The representations and warranties, as you might guess, are heavily negotiated between the buyer and the seller. Topics such as materiality thresholds, the applicable look-back period that would apply to those representations and warranties, whether or not a knowledge qualifier should apply. So, for example, kind of a standard representation or warranty in the government contract or M&A context might address whether or not, for example, the contractor, the seller has performed or been awarded any work contingent on its status as a small business concern or having some other preferential status. And so the question might come, do we need to disclose all such contracts, or could we insert a dollar, monetary threshold, any active government contract over $50,000, and then it would sort of limit the scope of the representation? Or maybe you would include a look-back period that would say, within the last 12 months or 18 months, we haven't received any contract awarded based on small business status. So that would, again, further sort of limit the scope of these representations and warranties. And then you might even consider whether or not a knowledge qualifier, it wouldn't make sense probably in the small business set-aside representation, but to the extent there's been some sort of a non-compliance with, an applicable law, and that representation extends to your affiliates or your subcontractors or your employees, it seemingly could be appropriate in that context to include a knowledge qualifier. It's possible that the seller entity, the company itself, may not have actual knowledge or fair enough insight into sort of the conduct of its affiliate or its subcontractor or its vendor in order to make that representation. So you would, I think, there would be some back and forth in negotiating, some sort of a knowledge qualifier as appropriate for certain of these representations and warranties. At the end of the day, though, these representations and warranties are basically a tool used by the buyer to try to shift post-closing risks. So the buyer is going to do diligence. They're going to learn certain things, good and bad, about the entity that they're purchasing. They're going to generally be comfortable with the things they know. And then they use these warranties, these representations, to try to fend off latent defects that maybe didn't surface during the pre-closing diligence, and maybe they would otherwise have no sort of basis to know pre-closing. But if something happens post-closing that's related to, some seller activity before closing, these representations and warranties might be used as a tool by the buyer to sort of shift post-closing risk to the seller with regard to latent performance and compliance problems. And so to the extent there's something to be sort of disclosed, so for example, if the representation is there have been no material issues of noncompliance with regard to any applicable law or contract term, if the seller knows that there has actually been some sort of a noncompliance or a violation, in order to make that representation accurate, they would include a disclosure that would be referenced in the purchase agreement and attached to the purchase agreement. And it would be a schedule of disclosures. So if Section 3.13A is the government contract representation addressing no small business set-aside work, Schedule 3.13A would list any government contract that was awarded to the seller based on its small business status. So there would be a list of contracts sort of responsive to that representation. All right, Hunter, let's move to the next one. And so, as you could guess, the scope and nature of the representations in the M&A context where a government contractor is involved is more or less going to overlap with sort of the key diligence topics and the key risks and obligations that the buyer is trying to assess pre-closing. So as you might be able to guess, some of the representations might address things like the contract backlog, the performance breach, if any, or any pending terminations, whether or not a higher tier contract or the government itself has already given, verbal or written sort of acknowledgement that certain of the contract's option periods or ordering periods may not be exercised, whether the government or higher tier contractor has given the seller some sort of indication that pricing or labor rates might be renegotiated or called into question in the future, whether there's been any disallowance of incurred costs or any open audit issues. Maybe DCAA has questioned certain costs, but the contracting officer hasn't gotten around to sort of assess the audit and determine if they actually should be disallowed under a cost reimbursement contract. So those open audit issues should be reasonably addressed within the scope of the representations and warranties, and if they exist, they would show up on the corresponding disclosure schedule. The payment of liquidated damages, prior terminations for default, instances of poor past performance evaluations, compliance with applicable laws and contract terms sort of in general, whether or not any certifications about maybe pricing information or small business set-aside work or compliance with certain other obligations, whether any of those certifications weren't accurate. Same with invoices, other submissions to the government, whether there have been historically any cure notices, show cause notices, stop work orders, maybe what the results of those were, whether any of those sorts of notices or orders are currently pending, as well as any pending or threatened claims, disputes, investigations, or litigation. So the gist of it here is that sort of the key risk issues will be addressed not only during diligence and sort of based on the buyer's own independent investigation, but will also need to be disclosed by the seller in response to these representations and warranties embedded within the purchase agreement. All right, Hunter, let's go to the next slide. And so, given those representations and warranties, the diligence topics in the government contract or M&A context would include certain of these that are listed here. And so, you can see them listed on the slide kind of at a high level. What I thought might be beneficial is I'm actually going to go to my template, government contract due diligence document request list and diligence question list. And I was just going to sort of scroll through this so you could hear kind of the gist or the nature of the threshold questions I ask when I'm kicking off buy-side diligence, in connection with a government contractor merger or acquisition. And so the first set of questions I ask are typically targeted at helping me better understand the nature and scope of the seller's portfolio of government work. And so I'll ask questions about, can you give me the approximate percentage of the company's overall revenue that's attributable to government work? If they come back and say, yeah, we've done one government subcontract at the state and local level, and it's 1% of our overall revenue, I'm still going to perform meaningful diligence, but what constitutes meaningful diligence in that context may be different than if I'm, representing a buyer that's purchasing a division of Northrop Grumman or Lockheed Martin that's exclusively a government contractor where all of their revenues are attributable to government work. So I think in fairness, and reasonably, we should be trying to right-size the buyer side diligence given the nature of the government contract portfolio maintained by the seller. And so I'll ask about that approximate percentage of overall revenue attributable to government work. Maybe give me the breakdown of prime contracts versus subcontract. Maybe the breakdown of work that's performed on a commercial item basis under FAR Part 12. That's kind of government contracting light, where you're subject to sort of a watered-down version of the government contracting obligation. So if I learn that they only do work on a commercial item basis, maybe the red flags go down a little bit, and I can, again, right-size the scope and quality of my diligence given the nature of that particular portfolio of government work. I'll ask questions about what percentage of the revenue is attributable to set-aside work, where you have to be a small business in order to be eligible to compete. I'll ask about, the nature of the government contract, if you could break it down by contract type so I can understand, is it primarily firm fixed price? Is there a whole bunch of cost reimbursement work? If there's a whole bunch of cost reimbursement work, maybe the red flag raises that there could be cost accounting issues subject to the cost accounting standards or the cost principles, or maybe there's going to be incurred cost submissions that are open that I'll need to look at. And so it's sort of an effort for me to understand a little bit more what sort of follow-up questions would be appropriate given this particular context. I'll also ask questions about sort of the breakdown between classified and unclassified work, the percentage of revenue attributable to both, whether the company maintains a facility security clearance, how they performed on their last audit, contractor assessment reports. I'm going to ask questions about open bid protest or historic bid protest to understand Is this sort of a highly competitive niche area within government contracts where I can expect that, there will be protests moving forward for future bids that are maybe pending or to be submitted? I'll ask questions in my initial submission to the buyer about internal investigations and whether they've resulted in potentially any mandatory or voluntary disclosures to a higher tier contractor or to the government. I'll ask about performance issues, and I get at that by asking about termination notices, cure notices, show cause notices, stop work orders. If there's any of those disclosed, I want to know, well, what was the result? What was the nature of it? Was it a funding issue? Was it related to your performance? Have they been resolved entirely? Is it something that's going to be recurring? And then given that, what we're really buying here is the reputation and revenue pipeline of the buyer, I'm going to ask questions focused on responsibility also. And one of those, again, focuses here on whether there's a sort of a program of business ethics and conduct that's, appropriate given the nature of the government work that they perform. So I'm going to ask to see those sorts of handbook policies and procedures, and I'm going to perform some sort of an assessment of those. I'm also going to ask to see if they do federal government work, prime work in particular, any contractor performance assessment reporting system reports. I want to know, how has this company's performance been historically? Are they meeting the mark as far as their technical performance? Are they delivering things on time? Are they getting good reviews? I'm going to ask specific questions about specific contracts. If I learn that they have a federal supply schedule contract, a GSA federal supply schedule contract, I'm going to ask to see their commercial sales practices submissions to the government. I'm going to ask if they have any policies or procedures addressing compliance with the price reductions clause, if that's going to be applicable to them. I'm going to ask to see information about their basis of award customer, whether they're remitting their industrial funding fee and reporting sales appropriately. So that sort of hopefully should give you a flavor as to the types of questions that I would ask as I'm performing diligence in advance of closing. And then obviously, if I get responses back that are troubling, there will be supplemental questions. And those supplemental questions could be addressed in the form of additional back and forth in writing, or they could be addressed potentially through interviews with key decision makers and managers on the part of the company, or maybe some combination of both. But ultimately, that's my exercise. That's my effort to try to understand what is this vehicle like that I'm purchasing, and the minute I purchase it and go down the road, are the wheels going to fall off and I'm going to end up killing a pedestrian on the side of the road, and then it's my problem? Or is this a vehicle that's maybe subject to repossession by law enforcement activities, where sure, the vehicle is here in front of me today as I pay the money. Is this a situation where this vehicle is going to be repossessed at some point tomorrow or in the future? And I guess one thing that I would share is a story here. One diligence kind of war story that I was involved in is I was representing a buyer, and the seller's government contract portfolio was exclusively a bunch of small business set-aside contracts. And so I think we reasonably went in and we assessed sort of the quality of their small business certifications. And this particular seller, their applicable size standard was 1,000 employees. And so they would routinely certify, we are under 1,000 employees, therefore we're eligible to do this work. And they were very successful. They had dozens and dozens of these small business set-aside contracts under this 1,000 employee size standard. And as we probed a little bit, we realized by looking at org charts and corporate governance documents and other publicly available information that a 51% majority owner of this company also owned a majority stake in a mining operation. Now, mining obviously in this case was not in any way connected to government work or government contracting. But under the SBA affiliation rules, in this particular context where you're majority owned by an entity that also owns another, majority stake in some other entity, you would have an obligation under the regulations to aggregate in the headcount of yourself, plus your immediate owner, plus your sister companies in this context and under this scenario. And it turned out that mining operation had thousands of employees. And this company, this government contractor target, had clearly not understood the affiliation rules within the SBA regulations as addressed there. And they simply were looking within, their own four walls and saying, we, us proper, we don't have 1,000 employees, so we're going to certify. So it was a situation where they had falsely certified small business status dozens and dozens of times. And under, again, that bad line of cases I referenced earlier, we recognized that the liability here was going to be potentially very huge, potentially even exceeding the total value of the acquisition. And so in that context, it was still an attractive business situation to go forward with the transaction. But in advance of closing, given the diligence we performed, we actually worked hand in hand with the seller to perform an internal investigation to identify sort of the scope of the issue and to make a mandatory disclosure to the government. And we worked through that disclosure back and forth in order to get the sort of comfort that we needed to move forward with the transaction. So that pre-closing diligence and related activities, coupled with appropriately tailored representations and warranties addressing these issues and potential latent liabilities that could follow post-closing, gave us enough comfort to go forward with the transaction under that scenario. But I think that had the diligence been inadequate or somehow not touched on this very key issue, it could have been a very negative and harmful situation for the acquirer in that context. I think at the end of the day, the moral of the story here is that there are various potential landmines out there when we're dealing with government work. And these landmines are unique to government work, not typically seen in sort of the traditional commercial contracting scenario. And so to the extent we're not meaningfully performing diligence pre-closing to identify these potential landmines, we're really doing the buyer a disservice and taking on an unacceptable or potentially unacceptable level of risk and liability. And so we need to utilize all of the tools that are available to us to perform this diligence. You'd be surprised how much information is available publicly through the GSA contractor portal, through usaspending.gov, on sam.gov. CPARS reports are oftentimes available. Other investigation tools that we need to leverage would be, GSA sales queries. We need to use the information included on the disclosure schedules. This would be information volunteered by the seller to follow up adequately on red flag issues. We need to use our diligence questions and document requests in sort of a sharp and pointed way to get to the bottom of the issues. And I think that to the extent we can do that, we can identify these landmines, we can know what we're buying, and we can mitigate to some extent, to some large extent, the risks and liabilities that are incumbent in the government contractor mergers and acquisitions context. And so this is what I do all day, every day. I'm very familiar with these issues. To the extent any of you have follow-up questions related to the content of today's presentation, by all means, circle back. On the next slide, Hunter, my information is available, including my contact information and also link to my bio at DLA Piper. DLA Piper is consistently year over year the leader in deal volume, and a big portion of those deals that the firm handles involve a government contractor, again, somewhere in the buy-sell chain. And so these unique issues, are squarely on point and would need to be addressed. So by all means, circle back if you have any follow-up questions or if we can provide any support in this context. Thank you very much for your time.
Thank you, Brad, for a great presentation and sharing your time with us today. And thanks to everyone who joined us. And I'll be sending out the slides later today, so you'll have access to this information, and the recording will be on our website and YouTube channel within the next 24 hours. And please join us this Friday as we cover each part of the FAR, and you can join us next Wednesday for more hot topics in federal contracting.